Hello and welcome to another update video about ICP. ICP hasn't really moved much since the last update. We're literally just seeing noise, intraday range bound noise. Not much going on in the market at the moment and pretty boring price action. So what we can see still is an overall unchanged pattern. I still think there are opportunities ahead, on the ICP chart. But I also see a risk of a move down here in this C wave of wave 2. So the thing is, we have moved up from the September 23 low in a potential 5-wave move into the March highs. That definitely leaves the door open for bullish interpretations going forward and further continuation in a still evolving bullish market. The only question is, how deep is the pullback going to be that the market does offer? And if a deep pullback occurs from here, then it would need to be confirmed with a break below $10.70, because that's key support that has provided strong support in the last few weeks. The market couldn't get below it and not below this March low. Okay, and overall, I mean, this is an area, it's not exactly that level, but it's sort of around the $10 mark, maybe, $10, $10.70, so a bit of a support range. But I've marked here specifically the March low as very relevant. Yeah. But that level needs to break in order to take out this sort of support, and then we could look at a dip into, as indicated by the red arrow here, into the lower support area there, which is relevant for a wave 2 pullback. So I'm considering this a 1-2 setup. You can also call it an A-B setup. Which makes sense, or actually AB, let's say an AB pattern, not necessarily a setup, an AB pattern, because there has been this long-term downtrend on the ICP chart, so we have to consider there's a little bit of uncertainty there, right? But anyway, we are looking at this as a potential for upside chart, as a potential opportunity if we get into this yellow support region. Even if we don't get into this yellow support region, I mean, there could be a C wave rally ahead or a third wave rally. But obviously, if we get a nice low in this support region, then it gives us a nice and clear structure, a more reliable structure. At the moment, it's just moving sideways with lots of double bottoms, triple bottoms, and they typically don't really give us much clarity. They don't really act as, let's say, great reversal patterns or great foundations to start a rally from, especially considering the latest movements, which have all been corrective to the upside. So I would prefer to see that like one more dip, and it doesn't need to go down deep into the support area. I mean, what I've shown here in yellow is literally just a standard support region from the initial increase here into the March highs. Okay, so you take the initial distance or the entire distance, and then you have here this as a support area. And ideally the price is holding that. Okay, ideally the price is holding that in any decline. All it tells us is that $4.33 is key support, and ideally we're holding that. Okay, because if we break below that level, then we are probably heading towards a new bear market low. This is a level where probabilities are shifting, but I don't necessarily see the price come down to that level anyway. Okay, so I'm looking at more like the area maybe around $7.62 and $9.61, which is between the 50% and the 38.2 retracement levels. And first we need to break 1070. So 1070 is key, is short-term key support, important support. Then we've got 962 and then $7.62. And also 865 is a Fibonacci projection based on the idea that maybe we started this decline. And so yeah, it's possible that, for example, we started this decline and the A wave already bottomed, okay, the B wave topped, and then this is the C wave decline projection. And the thing is, obviously, it is possible that this C wave has started, and in the C wave we've seen an initial 1-2 setup, then a third wave down would be next, and then 4-5. But it doesn't really want to come down, right? It doesn't really want to come down. The potential is definitely there for it to come down, but it would then need to hold below resistance. Initial resistance is $14.15 to $15.34. So as long as this area is being respected, I consider this a 1-2 setup to the downside. Not high confidence, but the rally was a 3-wave rally. So it's possible we come down, but then again, I can also see the potential for a larger B wave. Okay, so that is something that above $15.34 would be something I definitely would consider as primary. that we're extending this B wave. That wouldn't change the overall assumption, but it might mean that we're dealing here with some short-term shifts of the corrective wave structure. Very boring, very complex correction at the moment. I know it seems endless, but you know, I know it's boring, but you make it interesting for you. If you want to, you know, you can always make money by trading the range. You know, that's if the chart is boring, then make it interesting. You know, it's always a question of perspective. That's my update about ICP. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.